Here's everything you need to know about the opening range breakout by retracement report on edgeful.com. So right now we're looking at YM in the New York session in the last 6 months. And just to start briefly, the ORB is the high and the low of the first 15 minutes of the market open. Now here we are looking at the New York session. So our first 15 minutes starts at 9:30, it goes to 9:45. If you're looking at the London session, you're going from 3 a.m. to 3:15, et cetera, et cetera. It's always the first 15 minutes of whatever session you select, even if you create a custom session. So let's look at this on a chart. We have our market sessions indicator. I'm going to go and put on my ORB indicator. And what you're going to see here is I have automatically plotted for me the high and the low of the 15 minutes right here. I also have this New York session box plotted, which is the market sessions indicator. If you want these indicators, click on this button over here to the right, put your trading view username in here. You can find your trading view username by clicking your profile button at the top left. You're going to see it right there. Once you submit your trading view username in here, you're going to have in your indicator section the invite only appear. So what does this report measure? First of all, it looks at how far back into the ORB price will go after breaking out for the first time. Now, very importantly, I'm going to explain exactly what that means in a second. Very importantly, we have it broken out by single break days to the top side, which is a breakout day, and then single break days to the bottom side only. So this is pretty much saying exactly what happened here. ORB forms, breaks out, breaks back in, and then starts to continue higher. So this piece is the piece that we're measuring here. How far back into the ORB does price go while still being a single break day? So specifically what it's looking at is, let me just get rid of this. So now you can see, let's focus on the breakout days for a second because that's the example that we have here. You can see that price, and I'm on a 5-minute chart, so I'm going to change my customization here because you can see my time frame is 15. I'm going to change this to be 5 minutes. And what you can see here is that after the first candle breaks, how far back into the ORB will price typically go? Now, in this case, it was 170 points on YM. And what you can see here, if right now I have the 25% retracement, 50% retracement, and 75% retracement from the high. Now, it's important that you understand that when you're looking at a breakout day, which is this one over here, we're referencing from the high downwards. If you're looking at a breakdown day, it's from the bottom upwards. I'll show you an example of that in a second, but it is important that you understand. So let's go to our indicator. This is going to automatically plot these levels for us. Right over here, you can see these midlines. 1, 2, 3. I'm going to make these yellow. I'm going to make this one blue. I'm going to make the other one purple. So you can see very distinctly 3 different colors here. These are the 3 midlines. So here, this ORB was 313 points. The halfway point is this blue line, 156. 25% from the high is 78. Right over here, 75% from the high. It doesn't really matter. These are the levels. The indicator will do this for you every single day. So it's not just on this day, it's every single day. So you don't have to worry about plotting them yourselves or even figuring out what they are. All you have to do is have the indicator up. Now what you can see is that 75% of the time after price breaks out to ones, after price breaks like it did right here, 75% of the time you can expect price to at least retrace to this point right here. So if you're going to enter the breakout for a larger move for the rest of the day, you need to understand that price will retrace down here at some point throughout the day. Now you can see here, almost 60% of the time price will touch this midline, halfway point between the ORB high and the ORB low. So in this case, it did happen here as well. So you can see that happens 60% of the time. Now this is where it gets interesting. Only 21% of the time on a single break day to the top side will price make it all the way down here and then not break this point. If price breaks out to the bottom side of the ORB, that eliminates it from this day. We only look at single break days, either to the top side or to the bottom side, it doesn't matter. But the moment price touches the ORB low, that removes it from this entire report. We only want to measure single break days. And pretty much we want to use this report as the pullback that we want to use to enter higher. We can also use this as a stop loss as well. This is a great report to use. So for example, right here, your trade idea becomes pretty much invalidated if price only will get there and then bounce 21% of the time. So this is one of the ways that I like to use this report to dictate my entry. So in this case on the ORB, it is very likely that price gets to either of these points. So my entry should be around this area. My stop should be around this area down here, looking for continuation higher. So let's talk about some of the customizations. Here we have the ORB time frame. This is actually going to be, if you change this to be 30 minutes, you're now going to be looking at the 30-minute ORB, not the 15-minute ORB. This is really important. So if you were to change this to be 30 minutes, you need to make sure that you update your trading view indicator to also reflect the 30-minute ORB. So that's always, again, from the start of the session. And now you can see everything has shifted. Price moved up, the high of the ORB is over here. That moves up all the midlines, it changes everything. And in this case, this is really important, actually, great example. Price didn't break out of the ORB until this candle here. So the retracement on this specific day on the 30-minute ORB was, probably like a few percent. It did not retrace down here because this report only measures from the first break onwards, because that helps us determine the direction of the day. So in this case here, you can see that the probabilities drop off significantly from 75 to 60, from 60 to 40, and then from 17 to 15. So you have to understand the time frame that you're looking at. Now, by wick or by close, breakout criteria. So in this case, I'm going to reset, because I just reset my other one. I'm going to reset this back to 945. This, if you have this set by wick, which I actually recommend, well, actually, it doesn't really matter. It doesn't matter if you actually do by close, to be honest. I just use the by wick. There is no better way. It's just the one that I use. I shouldn't have said I recommend. But this, if you have by wick, will count as the break. But if you have the by close, this, or maybe this one, but definitely this one, will count as the retracement, because we always need to measure the first candle that breaks out. So if it doesn't break out until later, all of this price action doesn't matter. It starts based on whatever candle is the one that breaks out. So in this case here, this day, this is actually really important. This day, if you do by close, I'll actually just show you here. So what day is this? March 17th. Let's go to March 17th. Okay. So we're looking at 15-minute ORB on a 5-minute time frame. This is the 15-minute ORB on a 5-minute time frame. You can see here that it touched 1 and 2, 25 and 50%. It did not touch the purple one. That would be a 75% retracement from the high. Now, I have the by wick criteria here set. If I change this to be by close, and I click save, you can see that the black bar went away, because the first 5-minute candle to close, it could be either this one or this one. It doesn't really matter in this case. After this candle breaks, or this, let's just say this one, because this one definitely closed above. After this candle breaks, price only reached the yellow line, not the blue one. It didn't reach the purple one, which would be 75% retracement. It did not reach the blue one, which is a 50% retracement from the high. It only reached this one here. So you can see that it's only going to populate this over here. So super important you guys understand that. It is more strict when you have the by close. I use the by wick. It honestly doesn't matter which one you use. So it's just something to keep in mind. Then we have the candle time frame. This is going to change the actual chart that you're looking at. So I'm just going to do that so I can easily go back to the day that I'm looking at. Okay. So looking at this, the way that this works is all you're doing is you're changing the candle time frame. This is more so going to matter. It matters across the board, because in this case, if it breaks out in this candle, it's looking for the next candle. So if you're looking at a 15-minute time frame, you're looking for the next 15-minute candle. But mostly for the buy close, this is where the candle time frame is going to matter more. Because you need a 15-minute candle to close or a 5-minute candle to close outside of this range that you're looking for. So in this case, the first 15-minute candle to close would be this one here. I guess it did actually close outside on the 5-minute as well. So this one here would be the first 15-minute candle to close outside of the range. And then that would determine the start of the break. And then we can filter for any orb sizes. So bigger orbs will have different retracement levels, so you can filter there. And you can change the actual retracement criteria over here. So if you want to change this to be whatever, let's just say 10%. And I just want to, okay, 10%. You can see that this gets touched, and keep in mind your customizations 80% of the time. Now, if you want to see this on, let me zoom back in here. You need to remember to change your trading view indicator to reflect 10%. So this is going to move up. And now this is 10% of the entire range from the high. So this entire range is 313 points. This is 31 points. The important piece about breaks to the downside, which is we need to improve the actual indicator. So let me find a breakdown day here. Here would be a breakdown day. The important piece is that the indicator is the inverse, which is a little bit confusing, but pretty much in this case here, this is the range is 340 points. Right over here, you can see that right here. This is the halfway point. Now, when you're looking at this on the indicator, this is the retracement from the low now. The purple one becomes a retracement from the low. So right over here, this would be 25% from the bottom up, which is technically 75% retracement from the top down. So if you wanted to do a 10, now this is going to get a little bit confusing, but just reach out to our support if you have any questions on this. You can send us screenshot examples. But what I'm going to do here is change, so you can see actually, I have this set to 10%, which means that you can see over here, if we're looking at breakdown days, which are right over here, 90% of the time, price will come up to touch the 10%. The only way to see this on your trading view chart is to go over here and change this to be 90. This is going to be the opposite of what you want. So if you want to see a 10% retracement from the low, you need to put 90. If you want to see a 20% retracement from the low, you have to put 80. If you want to see a 30% retracement from the low, you have to put 70. So you're just doing the inverse. It's the opposite. Just reach out to our support if you have any questions on that. But you can see here, now this has moved closer to the bottom, which is a retracement from the bottom upwards. So I said this is a 340 point orb. You can see right here, this is 34 points from the bottom up. So realistically, you can play around with it a lot. There is pretty much infinite customization that you can do. One thing that I recommend is just to kind of get a feel for it on the standard piece. And what you can see here, obviously, is that you need to make sure, number one, that your customizations are always set to match what you're looking at. But in this case, this is how much on a single break day, how often price will reach each of the retracements. And you can see this is a single break day because it only broke to the orb low right over here. It did not break both sides, and it did break one. So a no break and a double break are not counted here. If this was helpful, please subscribe to the YouTube. We have a ton of information for traders that we publish for free. Make sure to check that out. Appreciate it.